If you don't have this step in order, sometimes half of your estate can go just to sorting this all out because you don't have a will or a trust. And so this is the thing. A lot of times people think stuff like this is for rich people that have millions of dollars. Truth be told, if you have a couple of $100,000, you need this more than a rich person because your family need all of that. They need everything that's coming.
Yeah, they do. I live in the South, and it just turns into fighting on the lawn sometimes when we're fighting over mom and daddy's china, that kind of thing. So it's best just to get that situated and handled before you pass.
Welcome to Those Odd Numbers podcast. My name is Jason Snider. I'm the founder and CEO of Main Street Financial Group. We are your fractional finance team.
I'm Summer McFarlen. I'm a CPA and certified tax coach. I'm also the co-owner of Main Street Tax Group, where we do strategic tax planning so you can keep more of what you earn.
I am Masheka Turner, and I am the owner of Bright Skies Business Services. We are your outsourced accounting firm and profit first strategies. And we are here to help you create wealth through your business by gaining clarity around your numbers.
Hi, everyone. Welcome to the Those Odd Numbers podcast. I'm Summer McFarlen, a CPA and certified tax coach. And today I'm here with Jason Snider and Masheka Turner. And today we have a very special guest who also happens to be one of our co-hosts, Masheka Turner. A few weeks ago, we were just talking about the podcast and stuff like that. And Masheka shared with us that she has a 6-step process for building wealth in your business. And so we thought it would be cool to interview Masheka today and get her to tell us about her 6 steps. So Masheka, step 1, clarity. Go.
Yes. So step 1 is clarity, and that is bookkeeping. We need to understand what's coming in, what's going out, and having everything in proper order. So that is step 1, clarity around the numbers.
Yeah, and I would add to this. I mentioned a few times on our podcast that that's the foundation for pretty much everything the 3 of us are doing in addition to the bookkeeping services. That's the foundation. You got to have that clarity before the rest of it. Without that.
And so I'll just say too, forget the rest of the steps if you do not have step 1. So
you can't do the other steps without.
So all of the things we're talking about today, even if you're not ready to do them all today, we want to put it on it. We want to talk about it so it's at least an awareness. But one thing we do want to make clear, step 1 has to be a part of the process. Step 2 is cash management. And that's usually where profit first comes is. I love it because we're already doing bank balance accounting anyways, but it just happens to take your numbers from your books, and we can actually implement and allocate based on what the business is actually doing instead of throwing noodles at the wall. So that's one of the reasons why bookkeeping is the foundation, because bookkeeping is going to give us a clear view of what's happening in the business. And then we're going to add that step in of cash management so that we can actually not only continue to operate what we have now, but make future decisions from those numbers with clarity.
Yeah. You need cash to have a valuable asset to build the wealth from. So yeah, if you don't have the cash there to operate, you're not gonna be able to do much without it.
That's it. That's it. And it's funny because a lot of people come to us wanting to do profit first. And if you're in a situation where your expenses are already over 100%, that's already, because that does happen sometimes.
It does.
And so it's okay. Are we using debt? Are we taking money out of our own? What are we doing to maintain this? And so this is the thing. We want to correct that as soon as possible, because at some point that lets us know we're going to run out of money.
Well, it's even more important to have a cash system
Absolutely.
in place. If they're spending more than 100% on expenses, they need to get that in control now. And if they hire you to help them do it,
we just can't print money.
I know it. And but that happens. It seems like an anomaly, but Jason and Summer both can tell you that happens more than what you think.
Next is where the next item would be something Summer is very familiar with, tax strategy.
I am. I can't wait to hear about this tax strategy.
Now, when I say tax strategy, let me be clear.
Okay.
I am not talking about somebody that's just processing your taxes and saying you owe $100,000. Preferably, I want somebody to say, okay, you owe $100,000. But if we do this, Maybe it goes down to 75,000. If we do this, we can do this. Because as Summer, and I'll let Summer speak about it more, all of it is a strategy with puzzle pieces. But you have to have someone that know where to put those pieces. So I'll let Summer talk more about the tax strategy, not just tax prep or preparation.
That's right. That's right. No, I appreciate that. And that's what intrigued me about your whole system that you were telling us about, because I never heard anyone say that a business owner needed a tax strategy, right? But you're putting these other things into effect. You're managing your cash. If you're running profit first, you're going to be profitable, right? And profit means you're going to have to pay some taxes. And there are some basic strategies out there, but the more wealth that you build and the higher amount you have to pay in taxes, there are some things that we can put in place to mitigate those taxes. Very unusual if there's not something that we can do, but they're not, some of them are not common. Some of them, it's instead of paying more in taxes than you should, it may be taking that cash and putting it in a different vehicle so it's not necessarily a cash savings, but it would be a tax savings while you're putting it into a different vehicle, usually some type of investment vehicle or something like that, to save yourself some money on taxes. And then there's also what we call income transfer, right? Things like paying your kids or some lease back strategies on equipment, stuff like that, we won't get into today because they're very deep, but there are some things that can be done, but you also need to be realistic. If you're not paying $100,000 in taxes, we really can't save you 100,000. But if you're paying 30, we might could save you 10 or 15. So it's not the be all in all or in all be all, whatever that phrase is, answer. But it's definitely a strategy that can help you as you are building wealth in your business, and it'll help you create more wealth.
And then one thing too, I want to say too about tax prep and tax strategy, and I prep my clients for this. Tax strategy is a little bit more of an investment usually.
It is.
This is how I'm thinking about it. If you owe 30,000 and someone can get you down to 20,000, to me that's worth the investment. And then Summer can check me on this. A lot of times, once that strategy is created, you can use that more than 1 year.
It's multiple years. You're right. So say you paid $15,000 for a tax plan and it saved you $10,000 over 10 years. That's a good return on that investment, or even 5 years. And really, if you can't, we know we're going to be able to save you some money. We have to look at some stuff, but we know, and it's usually more than what we initially think in the beginning. So anyway, thank you so much for putting tax strategy into
No problem. And then the fourth step, and this is very important, a wealth vehicle. Now, I don't care what your wealth vehicle is. It can be stocks, bonds, investments, real estate. I'm in all of it, all the things. But wealth building is intentional. And so if we're going to go through those steps of clarity, cash management, tax strategy, then we have to have something to do with all of those tax savings and that net income that was built up. Do you guys have anything to say about that?
Yeah, it's the vehicle maybe, or how to manage maybe a way to frame it for the audience is your business entity structures, or if there's multiple entities, it's a vehicle to achieve a result. So it's a way that might be a way to frame it, just structure things like that. That's management, if you will. Organize those different aspects. Maybe that's the way to frame it. Is the management is putting together all those different aspects into a cohesive plan direction.
That's it. And also do financial advisors. Those are where people, when I say the wealth vehicle is just whatever they choose, but the management, the financial advisor or whoever you're using is the one that's going to get you there for that vehicle.
Yeah. Let's go on to number 5.
All right. Number 5. If we're going to do all of that, then we have to protect it. And so that's where your wills, trusts come in at. And by the way, anybody that's listening, and of course, I'm always looking for these type of people in my network, because every client, ideally, that I work with, I want them to have all of these people in their lives. And of course, we're going to give you step 1 and 2, but I'm always looking for people, this step. So, of course, again, if we're going to do all of this and we're going to create wealth, then we have to protect it.
I also feel at this point in the process where they're building up some wealth and things like that, they're also thinking maybe about their legacy, what they're going to leave behind, whether that they're going to leave everything to their favorite animal shelter or they want their kids to have a little bit or something like that. I also feel like this is when people really start thinking about what they're going to leave behind. Is that kind of part of your protection concept?
That's part of it. And
Mhm.
then also too, I'll just be quite honest with you too. In most states, if you don't have this step in order, sometimes half of your estate can go just to sorting this all out because you
yeah.
don't have a will or a trust. And so this is the thing. A lot of times people think stuff like this is for rich people. When they think rich people, they think people that have millions of dollars. Truth be told, if you have a couple of $100,000, you need this more than a rich person because your family need all of that. They need everything that's coming.
Yeah, yeah, they do. And Nick and I live in the South, and it just turns into rednecks fighting on the lawn sometimes when we're fighting over mom and daddy's china, that kind of thing. So it's best just to get that situated and handled before you pass.
Yep. And so that goes into step 6, acquisition. So usually what that looks like for most of my clients, once they've gone through this, they either want to sell the business or they want to buy more businesses. Whether you're going to sell the business or if you want to buy more businesses, specifically if you want to buy more businesses, you're going to rinse, wash, and repeat with those other 5 steps. And so if you take those steps, you have created a system to build wealth. And one of the reasons why we wanted to break that down, a lot of times when you say a system to build wealth, people automatically think it's something complicated and something scary. But it's really about relationships.
Like we were talking about before, too. Keep it simple.
That's it.
Yeah.
KISS. Keep it simple. Keep it simple, stupid, I think. That's it. But keep it simple, seriously. So just to recap, I'll go back into those steps again. We need clarity, which is the bookkeeping. Step 2 is cash management, where profit first comes in handy. Step 3 is tax strategy. Step 4 is a wealth vehicle, financial advisors, whatever your vehicle is. Step 5 is wills and trusts. And step 6 is business acquisition.
And so a little mini step 7 is rinse and repeat, right?
There you go. There you go. Rinse, wash, and repeat.
Rinse, wash, and repeat. That's it.
That's it.
Wash, rinse, and repeat. That's it.
How to do it.
Yes.
Step 7 is do the first 6 steps over again.
Yeah.
That's it. But the thing about it is, Bill, you have to be very intentional. It's not something that happens. And I have seen people make millions of dollars, but because that step was not taken, they end up with a lot less than they should at the end of their life or at the end of their business. So you have to be very intentional about creating wealth.
Very true. And for everyone listening out there, Masheka's just not preaching. She also lives it. So she has done all these steps.
That's it.
Yeah. Anything else to add, Jason?
I think it's comprehensive to cover, give hopefully a framework for the audience. Consider whether it's through us or your own advisors. Now you have something to operate from, working from a place of knowledge from hopefully a trusted source like ourselves to bring to the table with your own advisors or seeking out new relationships so that you can put something like that for you and your business.
Yeah.
There you go.
All right, Masheka, I so love this process and thank you for sharing it with us and for being an example and being so passionate about it. Really appreciate
Thank you.
it. Yeah,
I really am passionate about it. I really am.
Yes, you are. And that's a good thing. All right, everyone. Thank you for joining us and we'll see you on the next one.
Bye.
Bye.
This content is for general informational purposes only and is based on current law and guidance as of the date of recording. Tax law and regulations are subject to change. This discussion should not be considered tax, legal, or investment advice. Listeners should consult their own tax or financial professional regarding their specific situation.